Today, let us look at the SARS, or rather taxman new target. What are they really targeting now in terms of the deduction that employers are claiming? It has been noted that employers are misusing the deduction that are available to them. So SARS, therefore, is trying to put measures in place to ensure that any deduction that is available to any employer in South Africa is not misused. Let us look at the article and hear what they are saying. The taxman is tracking down on abuse of employment tax incentive by rejecting questionable claims and disallowing related salary deduction for corporate tax, exposing employers to severe financial penalties. Right. ETI is an incentive to encourage employers to hire young workers. They said it has been cornerstone of the government's effort to combat youth unemployment since its introduction on 1 January 2024. With the scheme extended until 28 February 2029, employers have relied on it as a vital cost-saving mechanism. However, in recent years, the South African Revenue Service has intensified its audits and disallowance of ETI claims, citing widespread abuse of the incentive. So generally, what we are looking at here is the abuse of employment tax incentive. So this was an incentive that was created by government to incentivize the employer to employ the young or youth in South Africa so as to reduce the unemployment rate in South Africa. It was introduced on 1 January 2014 and it has been extended until 28 February 2029. Let's further look at what we have. Not only is the taxman rejecting ETI claims, but it is also attacking the corporate income tax deduction linked to salaries subject to ETI claims. Right? ETI claims has primarily focused on whether the individual employees claiming the incentive are really employees under the IETI Act. Where employers fail to substantiate this, SARS has reversed the pay-as-you-earn benefit derived from ETI scheme, often with crippling penalties and interest, the expert said. According to Daniel and Passion, SARS heightened scrutiny of ETI claims has primarily focused on whether the individual employees claiming the incentive are really employees under the EIT Act. Where employers fail to substantiate this, SARS has reversed the pay as you earn or PAYE benefits derived from ETI scheme, often with crippling penalties and interest, the expert said. So, what generally is happening here is that what the employers are doing, they are using ETI deduction even to expenses that were not incurred to remunerate the employees, right? Or for the wages that were not incurred to remunerate employees. So, what will be those? It will be instances where they are paying for independent contractors or non-executive directors. That is one of the examples, right? So in that case, they shouldn't use that benefit because it's only available for employer-employee relationship. So those are the kind of instances that SARS is currently working on investigating and determining those instances. So what is happening now that it happens that unfortunately you have claimed ETI for instances where you shouldn't. Unfortunately, there are tax penalties and also interest with regard to that claim that shouldn't have been done on the first instance. Let us carry on and see what you can do in order to avoid finding yourself in similar instances. The consequences are substantial. Employers forfeit their PAYE benefits and face additional corporate tax liability, interest, and penalties based on disallowed salary deduction. As I have said, there are obviously heavy penalties and disallowance after it has been found by SARS that you actually use ETI when you shouldn't have. A key concern has been the aggressive use of ETI by certain training institution where students are classified as employees but never actually receive cash wages, they said. And now SARS new tactic disallowing corporate tax deduction for so-called salaries could prove far more damaging than the loss of the PAYE benefit itself. This means ensuring that ETI claims are fully substantiated with clear evidence that the individual in question are legitimate employees under both tax and labor law. Employers who have relied on ETI as legitimate tax savings mechanisms must urgently reassess their exposure before SARS does it for them, they said. It is always prudent for employers to seek advice from qualified tax attorney when considering entering into any employment related tax arrangements or where there is uncertainty regarding compliance with legal requirements. Proactive engagements with a tax specialist can help employers navigate the complex ETI and corporate tax landscape, ensure that all necessary documentation is in place, and avoid the risk of unexpected assessment, penalties, and interest down the line. So, what is encouraged is that employers do seek legal tax advice or tax attorneys or the expert in tax to assist them to identify the instances that might put them in danger of heavy penalties and interest because of incorrect use of ETI. We do know that some of the employers might be claiming ETI not because they're trying to defraud SARS, but they are doing it because they're not 100% sure what to consider and what not to consider when claiming under ETI. So, what is advice for any employer in South Africa is that you seek advice from tax specialists in case you're not sure what you need to do to avoid tax penalties as well as the interest at a later stage. Thank you so much for listening to my YouTube channel. If you're in business or know anyone that is in business that might be interested in watching my YouTube channel, please share and also please subscribe to my channel so that the community can grow. Thank you so much.